Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 30th, and wow, what a volatile month we've seen. And just wanted to take some time. I'm going to talk a little bit about where we saw markets end the week last week and where we see markets moving from here as volatility has crept back into the marketplace this week. And we're going to touch a little bit on what's caused that and where we see things moving forward. So last week was a very positive week in the markets. The S&P 500 finished the week up 60 basis points or 0.6%. The mid cap outperformed that up 90 basis points, and then the small caps even outperformed up 1.2% for the week. Continuing that rally that we were talking about last week is the previous first part of the year, that leadership of the value, the mid caps, the small caps really took hold and really moved markets higher last week. Now, as we entered into this week, we have seen a 10-year treasury move to highs that we haven't seen in several months, and it really moved up very quickly starting last week. And if you remember back to February, March of last year, we saw the same type of behavior happen this week. Is when the 10-year moves higher, you saw the NASDAQ, which is very, very tech heavy and biotech heavy, which are full of companies that are trading at very high PE multiples. You saw those sell off pretty significantly on Monday. You saw some names that had very high PE ratios, which is a price to earnings ratio, as well as profits for the year. You saw some of those companies down 5, 6, 7% on Monday just because the 10-year treasury is moving higher. And so investors are saying, whoa, we've seen this story before. We're going to take our profits here. The cost of capital is going up. You're not going to be able to grow and maintain these levels and these ratios that you're currently trading at. So I'm going to take my profit. I'm going to go home, and then I'm going to reinvest that into the value sector, the more cyclically oriented sectors of the market. And you see the Dow Jones significantly outperform the NASDAQ. Well, the Dow Jones is very cyclically heavy, and that's why you saw the outperformance that you've seen. Now we move forward to today, and we started the day off higher, and we have since fallen down about 1%. And a lot of that has to do with several headwinds that are happening here, and wanted to really touch on what's going on, especially today. First of all, it's the end of the quarter, and it's also the end of the fiscal year for a lot of pension funds and institutional investors, as well as end of the fiscal year for mutual funds. So you have a lot of, on these days, you have a lot of profit taking or selling, where companies are taking their profits that they've earned for the year. They want to report that positive number, capture as much gains as they can for the year. The other thing that is going on is we have several bills that have to go through Congress. We have the potential government shutdown that we have the Senate has passed, but the House has to pass. We have the infrastructure bill that's going for a vote today in the House, and we haven't heard yet if that's going to pass or not. That's very important to investors. And thirdly, we have a looming debt ceiling that we need to address, and that has not been addressed yet. This is also the quiet time as we're ending the quarter, where companies are not sharing a lot of corporate news, as they have to be quiet as they're getting ready to report in the coming weeks. So you are seeing the markets moved in these time frames very much by macro headlines. And so these are the headwinds that are preventing the markets from really marching higher. Now, to put things all into perspective, even with all of these headwinds out there, we are still only 4% off all-time highs. We've had a very volatile month, but we'll still finish the quarter positive unless we have a cratering the rest of the day today. We'll finish the quarter positive, and we'll continue to see, moving forward, the value sector move markets higher, and we see the market rebound in October as the consumer is still very, very, very strong, and 75% of our economy is made up of consumption-based or service-based sectors. So at any point, if you have questions about what's going on in your individual portfolio, or if you own a bunch of growth stocks and you saw those go down quite a bit and want to know what to do with those moving forward, give us a call. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thank you so much.